Hello, today is December 19th, 2015. I'm Jeff Tennant. Thursday night we had a wall into the close, and I said I thought we would have a gap up even though futures were down sharply. I also said I was not going to risk any money on the position because I don't usually take trades overnight. It turned out to be a fortunate decision. I have a standing rule that if I'm wrong, we have a sharp gap in the undesired direction, so the call is killed before the market opens, and that's what happens. This is a usually very reliable buy signal. The wall into the close, it's the same signal we have at today's, at Friday's close. I'm going to review what I think happened Friday morning and use that to come up with a prediction for Monday. Well, here's the MEJT software. Didn't have a lot to say when we were dropping here and the market was collapsing. It said the drop was a false move and that prices would retrace. When we made a decent recovery, we banged into this MEJT resistance area. The system said it was a false move, and after this time prices would retrace, which they did. And I've got no new MEJT targets for Monday. Well, there are a couple of ways I can interpret Friday's action. It's always a negative when you drop on Friday and keep dropping all day long and close at the lows of the day. Usually, early Monday, the drop just keeps on dropping. The market just keeps on dropping. If instead you have a gap up, it's usually a pretty good sign that something else is going on. So what are the chances we have a gap up? Once again, we have a market which is holding at these lows, and with 10 minutes prior to the close, the lows hold, and then right at the close and even after it, we have a huge wall of selling with no pullbacks whatsoever. The implication is that it's the public who's unloading stock at any price. Well, here's your stilt, half a diamond's enough, and one way to read the pattern is that you set this Fibonacci grid at 38.2%, the first of your targets is at 61.8%, and so you have a target at 1988.5. That's one way to read it. However, when you drop like this and you slant down rather than up first, it usually isn't a sustainable pattern. It doesn't mean it has to stop right here, but often that's all you're going to have. We have a gap within the consolidation. This tends to be filled, this area here tends to be filled by a consolidation either prior to or after the gaps. It hasn't happened prior to, so I'm looking for this area to fill with a consolidation. We also had a target that we'd have a three-leg whipsaw. Here's your down, you're up and you're down, and that's completed. So I guess one way to read the pattern is that we just keep on dropping. That's not the only way. There's an interesting Fibonacci relationship here. This is the height of the diamond. Remember, half a diamond's enough. It's interesting you have a Fibonacci relationship with the time of the FOMC announcement. Probably isn't a coincidence, but you've passed up the target. However, sometimes instead of using the absolute high, you have to use one of these other highs, and there's the target right over there at Friday's low. just about. I also have some support, actually a lot of support at Friday's low by some other stuff. I also have a combo buy signal on the 15-minute chart that goes along with the sequential buy signal on the 15-minute chart. So based on that, I think Monday's open is going to be interesting. I think we have a good chance of Friday's low holding with, then we have a gap up. It could actually be a pretty strong move up. One thing I forgot to say, when this wall into the close does not hold, there usually is a reason behind it. And one of the things that happen is that instead of reversing the day after the market gives the signal, the market just repeats the same pattern. And that's what happened on Friday. You drop at the open, correct during the day, and drop at the close. Here, once again, you drop at the open, correct during the day, drop at the close. It's a carbon copy pattern. When that happens, I just count the 2 days as one, and I stick with the call that we usually have a gap up. So I think there's a good chance that we have a gap up Monday, and if I'm wrong, it'll be obvious at the open, and we should hit 1988 and change on the way to the 1960s. If I'm correct, I would anticipate having a consolidation in this area between 2030 and 2045. And that is today's call.